Hey guys, Jordan from Condo here. It is time for a market update. Been a few months, weeks since I've done one of these. Spent the last few weeks out in beautiful Nova Scotia, and it's time for a market update. Everybody is talking about tomorrow's Bank of Canada rate hike decision, and we're going to get into that and what it could mean. But let's just start with the TREB numbers from their last report. So here are sort of the highlight numbers from their report, and we'll dive in a little bit deeper. First, we're going to just focus in on average price here. So average price, we eked out a 0.9% increase year over year, obviously on very low volume. So if you look at our volume of sales, we're at 5,600 for August across all of the Toronto real estate board, right? Versus 8,500 in 2021. You're talking about decades long lows here and 34% down year over year. Active listings obviously massively up. As well as days on market. So market's bleeding. That's no secret to anybody. We're going to dive a little bit deeper than that. But if you look into the sales average price category for example, detached, you're showing negative 3.7% year over year in the 905 and negative 1.7% in the 416. So in Toronto proper, if you look at condos, 416, so Toronto proper, we're up 2.6%. And in the 905, we're up 6%. So again, condos doing a little bit better, condos and townhomes, so the entry-level price point. So looking at the total inventory count, so this is from Alex on Twitter. Great follow. I'll leave the link in the description. The blue line here is all of the resale listings on MLS across the GTA. So townhomes, condos, detached, all of the above, right? You can see here that it is coming down. Now, there's some seasonality at play here, right? Because you always see listings volume sort of decline through the summer and then spike back up for the fall market. But you can see here this August fall and this August as well, but you're not seeing nearly what we're seeing right now. So definitely a lot of listings coming off the market, some pivoting to the rental market. But I do think, September, first or second week of September here, we're definitely going to see listings start to kick up now that kids are back in school. Labor Day is over. People are focusing on real estate once again. Now, this is showing up in the months of inventory data as well. So if you're not familiar, months of inventory distills whether we are in a buyer's or seller's market. So anything below 3 months of inventory is a seller's market. Anything above 5 months of inventory is a buyer's market. You can see here, condos really had quite a strong surge in months of inventory, tons of new listings coming to the market, but it's starting to taper off now. Same with freehold, right? So freehold dipping back from what was a balanced market or barely a balanced market, dipping back into slightly seller's market territory, and depending on where you are in the city. So now the market has been very fragmented for the past couple of years here, really ever since COVID, and this is no exception. So we're seeing some listings, I've just the other day, I saw one in York region with 12 offers, sort of what we're seeing is like an end of summer pump, I almost want to call it. Whether that's going to hold through tomorrow's rate hike announcement, who really knows? But definitely for the past 3 weeks, we've seen a notable uptick in activity on both the showing sides, but also on the pre-construction side. So obviously I focus first and foremost on pre-construction, and there's a lot of demand for certain projects. For example, Harbor Walk by Tridel at Lakeview Village, tons of demand for $1.5 to $2.5 million units in that project. So there are a lot of buyers out there. It's just that it depends on the market segment that you're in. So February was very clearly the peak. You can see here, this is February, and this graph is for detached selling prices, calculated on a median basis. So you can see, for example, Durham was at 1.335 million. Now it's trading at $950,000. That's September, so that's very low volume. If we look at August, 935,000. Yeah. Halton's now trading at an average for detached, or a median for detached, of 1.275, was previously at 1.75. So of course, prices are off the top considerably. You're seeing some stabilization a little bit, like the rate of decline is changing, but prices are still declining. So let's take a closer look at prices since peak. So I did a quick calculation here using the Habistats data from TREB, showing the median price difference from February of this year, the peak of our market, versus August, and the percentage decline we've seen in price. So Durham's down 30%, Halton 27%, Peel and Toronto at 25%, and York faring best so far at 17.7%. Now, again, I like to add a little bit of color and a little bit of context to these scenarios. Obviously, no real estate market is straight up all the time, But if we compare August of 2022, so last month, versus August of 2019 for detached median selling prices, we see Durham is up 45%. Obviously, Durham, one of the biggest benefactors of COVID, right? Halton up 38%, Peel up 42%, Toronto up 31%, and York up 40%. So again, that's a 3-year gain. You're looking at 10% year over year in all of these markets or more, even accounting for the price regression we've seen. So I think it goes without saying, like, obviously the hikes in interest rates are reducing buying power, affecting buyer sentiment as well. And as a result, you're seeing prices come off the top quite quickly. When you factor in the new cost of mortgages, for the peak prices versus August prices, the homes on a monthly basis aren't any cheaper, right? But of course, when you factor in the lower down payment, or just the equity position down the line after some appreciation, obviously you're much better purchasing today at higher rates than you would have been purchasing with lower rates in February. That goes without saying, but it's just worth noting that, like, on a monthly basis, on an affordability basis, it really the situation hasn't actually changed for the better. It'll be interesting to see how that plays out in the future. Quick update on the Whitby detached versus CO1 condo average selling price. So one of my favorite charts, blue line, obviously purple, blue. That is the detached selling price in Whitby. And the green line here is the CO1, so the downtown district of Toronto average condo selling price. Somewhere around here, I was talking about how crazy this separation, this gap, this market dislocation was, and that it would inevitably correct over time, whether detached in Whitby had to come down or Toronto condos had to go up. And people called me crazy for that, but I think it was pretty obvious in hindsight. And you can see that gap is starting to close now. Whitby detached in particular getting hit particularly hard. Condos doing somewhat well by comparison, but also rolling over in price. So I'll keep updating you guys on this one. So tomorrow we are expecting a 75 basis point rate hike. What do I expect? Who knows, man? I'm not an economist, but I'll tell you what, if the economists are telling us 75 basis points, I will listen to them and I will assume that as well, bringing our rate to 3.25%. This will, of course, further reduce buying power. And ostensibly, that'll take some price regression with it. That just makes sense. However, what I will say is I think the rate of decline will slow. I think it already has started to, and I think it'll continue to slow until we kind of enter an area where we trade sideways for some time. That is my prediction. Okay, not financial advice. Don't come back here and comment if I'm wrong. Okay, I don't want to be held accountable for that, but I do think that's probably how we'll see it play out. Now, if you're on Twitter or you follow a lot of housing news, you probably have heard about the trigger rate. So, what's the trigger rate? Trigger rate is the point in which if you're on a variable mortgage, right? If you're on a variable mortgage, at a certain point, interest rate keeps coming up, and at a certain point, your payment no longer covers any principal. It only covers interest. And at that point, the mortgage payment, the monthly payment, has to be adjusted so that you can pay for some principal amount. Twitter is talking about this like it's a doomsday scenario, right? They're talking about this 75 basis points is going to push a lot of variable rate mortgage holders above that trigger point and mean that their actual monthly payment amount will have to be adjusted in order for them to actually have some principal pay down, right? And they're saying that this is going to cause a cascading effect of a ton of new listings coming to market from people who can't afford those new increased monthly payments. And as a result, this is going to be a catalyst for our next steep leg down in price. I don't buy it. I'll tell you why I don't buy it. Because I remember distinctly 2 years ago when everybody was talking about the mortgage deferral cliff. And that, if you remember, a lot of banks were giving you deferrals on your mortgages at the start of COVID. And a lot of people were talking about as soon as those deferrals run out, as soon as they run out, everyone's going to list their homes because they can't afford their mortgages and the prices are going to tumble as a result. And you know what? It never happened. It never even came close to happening. And as a result, I think this is somewhat similar. I think in reality, the average person, they see their payment go up to $400 a month. Banks are going to be accommodative to people who are up to date and paying their mortgage. Just as long as you're paying a little bit of principal, I think everybody's going to be fine and everything's going to move forward okay. That's not to say we're not going to continue to see price regression in the housing market if rates continue to rise. I think if rates do continue to rise, we will continue to see the housing market hurting as a result. I'm just saying that I don't think you're going to see a massive influx in housing listings as a result of variable rate payments moving up. And if you like this type of content, please like and subscribe. I'm going to be putting out one of these every single week. We think. And would love to hear your comments below, and I'll see you guys next video.